So, Jim, I'm sitting here in beautiful Vernon, British Columbia, in the Okanagan Valley, and with Jim Paterson on the line. I've known Jim for a number of years. So what we're going to do today is talk a little bit about the stock markets and also the resource sector. In particular, I was going to get an update from Jim on his activities with Valor Metals. How are you doing this morning, Jim?
Sherman, I'm doing incredibly well, and I'm honored to be on this call with you. Thank you.
Well, my pleasure, Jim. Jim, so where are you exactly? I know you're not in Canada right now.
I'm in Fort Mill, South Carolina.
And what's the weather like there? Right now in the Okanagan, it's absolutely beautiful and sunny, and we're starting to get people moving around a lot more in the midst of COVID. What are you seeing down there?
So this neighborhood that I live in, it's suburban, so there's lots of people out walking. I've actually seen, what I did notice the whole time is that people I didn't even know lived here, I saw them. And what I really liked seeing is that they were out walking around with their families. So family bike rides, which isn't something you see that often, or people are out walking, spending time. So it's very different in a suburban area or a smaller town than I think it would be in a big city where you kind of scared to get into elevators and that type of thing related to the COVID crisis. So here, life is good, weather's great, and people like me are able to operate on the phone and Zoom calls, Skype calls, sort of business as usual for many elements of the sector I'm in.
Sounds great. Well, I'm like you. I'm really enjoying the nice weather, but I'm particularly enjoying all the conference calls. And I'm not a big Zoom guy, but certainly I've been enjoying doing conference calls with other executives, other mining guys, which is really the purpose of today. As you know, Jim, I've been really involved in capital markets for a number of years, and more recently with you, our involvement in Valor Metals. We want to keep this call relatively short, so we're going to kind of zoom through it, if you will. For me, from my perspective, I've built, my entire career in investing in the resource market on what I would call the 3 Ps, which is, the quality of the people, the quality of the project, and we as investors have to look at the price that we're paying for these things. So it's really those 3 Ps that have attracted us to get involved with Valor, and no different than what's the concepts and philosophies we've used to build SKRR Exploration as a deal that we're working on in Saskatchewan in the gold sector. But we're very interested in what Valor is doing, primarily because of the people that are involved. So, perhaps just talk to me a little bit about your goal as a chief executive officer of Valor, because it is the philosophy of the management that is one of the top things that we look at. So maybe just tell me a little bit about Valor.
Sure. And I'll make a comment too with the 3 Ps. You can kind of all encapsulate it and summarize it by saying you're looking for value. You're looking for high value people, high value projects, and you're looking at making investments where you're getting good value for your money. And I definitely see that when we operate as a group. So Valor is part of Discovery Group, which is an alliance of public companies, and you can look up Discovery Group on the web. And really we focus on working with the best possible people for the roles that they'll be fulfilling. And what we find is when you find the best possible people, generally they come up with the best ideas. So they come up with the best project ideas and the best way of executing. And then generally you'll be able to attract capital to those great people and those great ideas or those great projects. And you really can't get anything done if you can't raise money. can't advance your vision if you're broke. So in the case of Discovery Group and Valor, we've been able to attract really great people, and they have great project ideas, and we've been able to raise money to advance the project. In terms of Valor right now, we have acquired a project in northeastern Brazil called Pedra Branca, and that project is a PGE project, or platinum group element, so with a focus on palladium and platinum, about 60-40 palladium to platinum in the 43-101 resource. And we are, right now, we're analyzing the planning so we can start a drill program. We're funded for that phase 1 drill program. There are 2 phases that we planned, and we'll be able to get going as soon as safely possible. And what we like about the project is that it's a big land package with high-grade mineralization, in many cases shallow high-grade mineralization. There are known deposits, which we think we understand the fingerprint of those deposits, and we think we can find a lot more of those similar type of deposits. And we think it's going to be an exploration discovery story for the next couple of years. That's our wheelhouse as a group. So we like projects which have large scale, high value mineralization, lots of money invested by previous operators, and with the data that's been generated by previous operators, perhaps look at that data in a different way and utilize our team's strengths and skill sets to make discoveries and add value through exploration.
Sounds, very similar to what, we're doing in Saskatchewan. And when I look at sort of my experience over time, I think is similar to yours, Jim. I originally, one of my first investments in the resource business goes back to the days of Viceroy. And with Viceroy Resources, we got introduced to that deal through Brock Ainsley, who's kind of a top broker in Kelowna. And that drew me into some really high quality people, Mike Halverson, Patrick Downey, Ron Nedolinsky. I mean, Viceroy was a great project. I mean, they had a wonderful gold asset in Argentina, but really it was the people that drove, the real value creation. And that's really what we've been trying to do at SKRR, is surround ourselves with, amazing people. And that's where I see the value in Valor, having quality management like yourself that has sort of the wisdom and the compassion for shareholders to really drive the value. So we know we've got the right product. We know we've got the right people. Maybe just talking about the size of the prize that you see with Valor, because that really, for us, like in Saskatchewan, we're going in on a purely exploration thing, and we know we have to find the next potential gold mine, and that's where it's going to create a lot of the value. We've got a relatively low market cap, but maybe just, Valor's got a low market cap right now. So what's going to drive the value? What's the size of the prize as we go in and start exploring in Brazil?
Yeah, I don't know to quantify the end target for how many ounces or millions of ounces that we think we need to delineate at this stage. But really, we're not going to go in there unless we think we have the capacity to make discoveries, to prove the narrative that it's a district, it's a PGM district. And that would mean that there are multiple zones of mineralization that we could move from discovery into inferred and measured and indicated resources, and then prove to perhaps a bigger player that it would be worth it for them to invest in Brazil and all the infrastructure necessary to build a new PGM mining district. As it stands right now, much of the platinum and palladium in the world are coming from places that we would consider highly risky from a jurisdictional perspective. And we know that the players, particularly those that are producing these metals in South Africa, are looking for ways to diversify some risk away from some risk. And so we're kind of thinking our wheelhouse is exploration and discovery. If we can do our job, we can prove to them that this project is valuable enough for them to move into that the Brazilian jurisdiction, where there currently isn't PGM mineralization being mined as primary PGM mines or platinum group metal mines. So the size of the prize is a district that is sought after by the industry players, and that's what we're attempting to prove over the next few years.
Yeah, similar to what we're doing in Saskatchewan, really, and again, I guess I go back to it's just so heavily weighted for us and on finding the right people, because the right people leads to the right project, and then it really becomes the job of the investor, to make sure they're paying the right price for those assets. And I've been fortunate over 20 years to be kind of standing, along with retail investors. And Jim, I can tell you from experience that if you don't deal with the right people, you're just taking a lot more risk than if you deal with the right people. And is that something you found over all these? Well, obviously you have. You surrounded yourself. You are one of those great people, but you've also surrounded yourself with extremely successful people in the Discovery Group.
That's the thing. And I see that about you too. You have really close friendships, Sherman, and you trust the people you work with. They're people you can count on. And one of the things that I kind of see in you, and I have a question for you specifically, how do you see yourself, your role as these companies you're a part of? Is it, because it's very different than a standard investor, and it's very different than a typical manager. So how do you see yourself fitting into these companies you're involved with?
Well, I think it's evolved a bit, Jim, over the years. I mean, we originally came, very clearly from the retail investor side role. My role as a retail broker for many years. So, our 100% of our mandate was to get a decent rate of return on our clients' capital. So, our role was to go in and evaluate companies and look for really good quality managers, really good quality projects, and then make sure that we weren't overpaying. I would say that it's evolved a bit now with me being more on the private side, where, we've got a dual role of raising capital for companies, but at the same time, we have to make sure that whenever we're raising money that we're paying, the right price, because ultimately, the shareholders' rate of return is going to be dictated on what they paid for it. I mean, you can overpay with a really good project, and the project will get you out of trouble over time. But the higher the margin of safety, the better it is for the shareholder. So I guess we're probably see ourselves a bit more of a partner with management now than in the past. We're getting more involved with the CEOs and getting a better understanding of what their plan is and how they're going to create that value. And we also will assist in the markets by creating retail exposure. So, we're kind of really on the team, especially on the companies that we actually go out and get involved in the private placement. And, we really enjoy it, and because it's all good quality people that we work with. So, that's what we do.
And because the markets are up and down all the time, and sometimes how people act when things are going terribly wrong, it says more about them than when things are going very well. So when something goes wrong, what do you think differentiates these really great management teams that you're aligning yourself with from poor ones? Like what are those differentiators that say this is the right team that should be helming the ship?
I would say there's a couple things. I mean, we really try and focus on companies that, where the senior executives and the management have a real respect for shareholder capital, first and foremost. So that relates to being a low-cost operator. I mean, it's in every business, whether it's, I don't care what you're doing, running a restaurant, running a public resource company, you have to be a low-cost operator. So I think that mentality of making sure that you're doing things efficiently and not wasting money allows certain management teams to perform better when the market's tougher. And some of it is just, people that just don't quit. And you can't lose if you don't quit. And so I think there's a bit of guts and glory in the resource business, where it is a tough business, and people that really protect shareholders' capital, they protect the share structure. They do things, properly. And there's going to be mistakes made along the way, and you have to sometimes pivot and shift. But the really great CEOs, they work hard, and they grind it out when it needs to, when that needs to happen. And they promote harder when it's promote/market harder when it's tough, and protect the shareholders, protect the capital. I think that's one of the defining features. And the really good CEOs and really good people in the business just have a way of, finding great assets, and those great assets combined with the great people usually protect you in the downtimes. And in fact, you can make a lot of money in the downtimes, by sticking to those philosophies when it's good and when it's bad. So that's how I think
that's your point on your third P on price. If you're buying your asset at market tops because you're reliant upon the fact that that's when the money is easiest to raise, you will overpay. That's my opinion. So in fact, it goes to, that's why you need the right people who get access to the right deals. And if it is in a market bottom, that's when you're going to be paying the best price for the projects. And we had this conversation before about what were you saying about, let's go through the door now before everyone else stampedes through, or what was your philosophy there?
Yeah, no, I think it was great. I had heard it from another successful investor, and is you can go through the door now and take your position in great companies at really good prices right now, or you can go through later with a whole bunch of other people trying to get through the same door. And of course, that just drives the prices up. So yeah, I think it's a wonderful analogy. And I see that a lot with the resource sector now. There's some great prices available with great people. And I'm saying, and we, you and I, Jim, we know this from doing business together over so many years, is that first you got to get the people right, and the right people tend to get the right projects, and then you just surround that by making sure that you're paying the right price, and make sure you have a margin of safety, and pay attention to the valuation. You have to look at the price, but there's no point even looking at that if you don't have the right people in front of it all.
Completely agree. So I'm very happy we found each other. We're lucky enough to work together, Sherman.
Yep, it's been, it goes all the way back to, we probably originally met in Vancouver, but I know I'll never forget having a beer and wings with you in Vernon, BC when you and John Robbins made the trip out here, and I thought that was pretty special.
Yeah.
I think I said, I don't want to meet you in the office, I'll meet you for beer, and you were there.
We were even more interested, I'll be honest. Exactly. More interested, for sure.
Well, it's great chatting with you, Jim. It's
thanks, Sherman.
I think we
great chatting with you too.
Wrap up the call, and we'll talk to you soon.
Absolutely. Have a great day.